The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to talk a little bit about the German DAX today. As you can see here from this chart that we posted, it was a beautiful ABCD pattern coming in on Friday night. And we had exactly the same thing happening in the S&P cash, the S&P, and also with the Russell and the Dow Jones. They were all just lined up so perfectly. I sent a video out early Sunday. It must have been around noon on Sunday, showing the bullishness that was staring us in the face if we were to gap up. And, of course, we gapped up a few points, and we've gone a few points higher than that today. So how much higher we're going to go, I don't know, but that is a completed pattern. I would like to share with you, as you can see here, if we believe in these Fibonacci numbers, you can see here where we were in the cash market here on Thursday. You'll notice here that we had that little bit of a low, and then Friday we had the explosive move to the upside. And we're way above here. Excuse me, you can't see that. You can't see the arrow. We're way above 336, so that's telling us that this is a for real move. So whatever the news happens to be, it's acting very, very bullish, and that's what you have to pay attention to when you're doing it. The Nasdaq also led us up, all the way, which was usually what it does. And I think I can show you that without too much trouble. You'll see what we were looking at today. I'll get this up here to see it because we've already reached it. I believe we're here right now. I'm not even sure, but I believe we're at 13,006. Let me double check it here. Hold on 1 second. 13,006. Nope, we haven't quite got there yet. We're 13,000. Yeah, we did it. 13,065, 11,365 was the number, and the 382 number was that number, 11,365. So if it's going to stop, and I don't think it is, it's going to stop there. So that's what I would, that's what I'm looking at. I don't know. I'm just looking at the charts, folks. I can't tell you any more than that. So we'll see if that's it. If you want to take a shot at it, this is the place. I mean, it's better to sell it here than 300 points lower. That's the old, market adage that they say, sell them when they're high and buy them when they're low. By the way, any of you that have a chance to find out if they can contact, I have lost contact with John Hill. His cell phone's disconnected. His home line is disconnected. And I've not been able to contact the kids. I contacted Ed Dobson, and he said, that he thought that John was okay, but I don't believe that because the Futures Truth email is out. So if anybody's heard anything about him, I usually talk to him every 2 or 3 weeks. I talked to him on his birthday back in February when he turned 94, and then once or twice after that. But since that time, I've not heard anything from him. So anybody gets a chance, please, let me know. I even chatted with Larry Williams over the weekend. He's up in Montana right now, and he did the same thing and hasn't been able to contact John. So I'd certainly, if you're in that area, he lived at 815 Hillside Drive in Hendersonville, and so that's neither here nor there. But gosh, I very shocked to hear that. Anyway, I did lose a couple of friends over the past few days that are elderly, not the COVID or anything like that, just usual stuff like the big C and some of the other things that go wrong as you get older. All right, folks, we're having a nice little rally here in the British pound. As someone mentioned, if you do your charts on the British pound, you'll see that the only thing that it did overnight was make a 78% retracement of the previous high. The euro is still the weakest. If you'll remember, when we were doing the euro, it made that beautiful ABCD pattern. and stopped exactly where it should have. And now we're hoping that we can get up a little bit of more of a rally here, to get short the euro again. So the $64 question, and it's always a question, is how high we're going to rally. My really best guesstimate would be we could rally all the way up to that 118.50 level, which would set up a beautiful 135 pattern. But I believe that we are in a bear market now in the euro, i.e. a bull market in the U.S. dollar index, but it won't be straight up and it won't be straight down, as we all know. So that's only in the stock market that it goes straight up or straight down. So that's neither here nor there. Here in Tucson, they have the disease has not gotten any worse, but the restaurant situation is some of the restaurants that had opened have now closed. Why, I don't know. The university is back. All the kids are back in school in the university, but the high school kids are not. I don't know how they figured that part out, but that's what we'll see. I think we've lost, on a worldwide basis, I think we've lost, I don't even remember the number. I know it was a very small percentage of the total population, but I think it was 10 million. 10 million out of 7.1 billion. That's not very much, but that's still, if you're in that list, that's not a good thing. If you have any questions, folks, it's 877-927-6648. And when I started the day today, when I got up early, I noticed that something was wrong with the computer, and then I had somebody check it for me, and I've been hacked. And so I've been able to get a few things out, but not anything like I want to, because I just don't have the access to some of these files that I had. I don't understand why they don't make hacking a really bad, penalty, like robbing a bank or something like that. That's the one that I just quite don't understand. It gives me a little bit of trouble when I try to understand that. Okay, let's. Someone's asking me also about the Elliott Wave. Folks, I looked at Elliott Wave way back in 1970 when John Hill showed it to me. I have a hard time understanding all of these little 3 5s and 1s and 2s and 9s and 6s or whatever they do. But, I've always felt that ABCD was the easiest thing to understand for me. And believe me, I'm a simple person to try to do it, and that makes it as easy as hard as best I can. So we'll see if it's going to be if that's going to be the case. All right, let's move on here and talk about the crude oil. I believe we're getting ready to make another leg down in crude oil. We had a little bit of a rally last night. I don't believe we're going to get the crude oil, the October oil, actually could go to November now, above the 42 level. The high we made, of course, on that 61% retracement level came in at the 44 level. And I don't believe we're going to get above that. And I think we're getting ready. And this is my opinion, just based on the charts, folks. It has nothing to do with fundamentals. But we should start rolling over here now, heading down towards that $35 to $31 barrel level, which is the 382 of the whole range. It's hard to believe, folks, that, we back in April, we were at $6 a barrel, and we rallied all the way up to 44. And that was a 61% retracement off the high that we had in January. So very interesting markets, as they say. May we live in interesting times, is the old Chinese curse. And that's certainly what we have under our belts right now.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I wanted to go over a couple of the FANG stocks because they were certainly indication that they might be a little bit stronger today. I posted the chart for Apple, and as you can see, it completed that perfect ABCD, and that means if it opens higher, which it's certainly going to now, as I see from the tape, that it's going to open sharply higher. It tells you that you really wanted to go, that it was really ready to go up. And another one, if you just take another look at it, I don't trade these, but I do follow them because everybody watches it, and the NASDAQ is so influenced by these. But look at Netflix as a perfect 382 retracement with a strong close on Friday, another indication that it was in a very, very strong buy mode. Another one, look at this one. These were just so bullish, it was hard to understand why it could be so bullish given what's going on in the world. But by golly, all we could do with the Microsoft was make a 382 retracement of that whole move from way back in early August. I mean, that's really bullish action, folks. None of these were looking very bullish. They were a week ago, but they certainly are not now. Now, if we take a look at this was the weak sister of the whole bunch. Which is Google, and you'll notice here that we were able to have a close relatively good on Friday, but all it could do was not even make a 50% retracement, just a little below the 382 at 45, and that took 5 weeks to do that, folks. So that's a really bullish sign when you're looking at some of these, and I think the last one that didn't look quite that bullish, it's still relatively bullish, is the Facebook, also looking pretty nicely. That's one of the things that you want to keep in mind. So those are the ones that we were. Did I get them all? I think I did. Apple. Oh, I didn't get the Amazon. Amazon, another one. This is a really powerful one. Look at what happened after. Couldn't make the 382. It missed it by about $10. At 28.80, and then it jumped 200 points, believe it or not, and look what's happening. So that's what we're watching here today. Now, will the market go straight up today? I don't know the answer to that, folks, but nobody else does either. that's the whole key to what we're trying to see here when we're looking at some of this stuff. So it's just a matter of determining where your methodology for trading is. And that's what I want to take just a second to talk about that. Well, more than a second, because I know some people have asked me about moving averages, and some people are very, very good at using moving averages. You have to understand that the definition of a moving average is it's moving and it's average. So what you have to do is you have to design a plan that tells you within the zone of what you're looking at that you have a place to enter where you quantify what your risk is. That's the only thing that you have with the ABCD and the Gartleys and the butterflies, the 135s. That's the one thing that you do have, is it quantifies the risk, because if it goes beyond a certain point, and we have a pretty good idea what that is, that tells us that something's wrong in the pattern, and you better get the heck out of the way. And that's why last on Sunday night when we opened at 6:00 in the evening here in New York. Well, no, I'm not in New York. I'm here in Tucson, Arizona. But when they opened in New York, we gapped up about 8 points in the S&P and gapped up about 80 points in the Dow and about 25 points in the NASDAQ, and it was off to the races. I mean, it was basically telling you that I'm bullish today, so don't stand in my way. So that's what we're watching. Whether it stops today or not, I don't know. This is a day after Yom Kippur. Yesterday would have been Mark Douglas's birthday. He would have been 72, and unfortunately we lost him 4 years ago already. And anyway, we'll have Stan Hartley as our guest here at the break, because he always has some really good things. If you'll recall, Stan gave us this chart here that worked really well for a month, and that is the one where we're looking for something to happen here sometime this year or early next year. So, and with I think we have an election coming up in November. I'm not sure. I haven't checked the news lately, but that'll be an interesting phenomenon. If you'll remember, those of you that were watching the tape on the 2016 election, when it appeared that Mr. Trump was going to lose Florida, the Dow Jones had dropped 800 points and was trading at limit down. And then 20 minutes later, it looked like he had a chance to win Florida, and it came off a limit about 400 or 500 points and started rallying the rest of the evening. And as he would pick up a state or two, it would rally another 200 points. By the time we got to 11 o'clock at night here in Tucson, it was unchanged on the day. It had moved 1,000 points down and 1,000 points up, and that was history. You can go back and look and circle that on your chart, because that was a significant low. So those are just a few of the things. I want to spend a second here with Bitcoin, because it's beginning to show it has some really good possibilities here for a nice move up. You'll notice we pulled down to a perfect 61% retracement there on September the 5th. Then we rallied up, pulled back, and now we're in the process of making a Gartley up here at 11,750. And if we can ever get this thing above 12,600, it's got game, folks, because look at the sell-offs that we're getting. That sell-off that we just made at the 382 there, or at the 61% retracement, wasn't even close to a 382 of the low that we made back on March 23rd. So this is a flat-out bullish chart. Now, that's just Bitcoin. I look at a few other. I don't trade them all, but I don't trade any of them, actually. But I do watch them, because I think that is the future to some of this stuff that's going on, because we are definitely moving towards a cashless society. I don't know if you folks know this, but in Hong Kong, well, not all of Hong Kong, but all of China, there is no cash over there. You just use your phone or your Apple Watch, or their Android, whatever they have, and it just goes into the machine, and that's it. And there's no more cash. They just don't have any more RMB. So that's if you want to buy something. So it's pretty amazing what's happened here, in just a matter of a few. Someone's telling us that perigee is on us today. Yes, that's and we're also coming off of that. I think we just had we had the new moon, and then we had Rosh Hashanah, and the full moon should be coming up here in about October 2nd or 3rd. Oh, it's the Mooncake Festival. It's coming up this week in October. that's a big thing in China, folks. That's the equivalent of New Year's Eve. And they have the moon cakes, which are little things like angel food cake that they give out, like trick-or-treat things. But they always have a little party over at the Chinese Center here in Tucson. We're going to be a little laid back a little bit this year, but that's what they do in China. It's a very, very big thing. China is closed for the whole week. All of next week will probably be closed. That'll take us through the 5th through the 9th probably, and so it'll be some maybe reduced volatility from Asia, but not much because the people do trade it, even though they watch the other markets in the world too. We'll take a break here. We'll have Stan Harley up, 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Hartley of the Harley Stock Market Letter on the line. Stan, how are you doing this morning?
Good morning, Larry. Doing just awesome.
We have a question before you start, and I'm sure I have the answer, but I'll let you answer it. Do you take any consideration to what's going on in the political arena on what's going on with these patterns that you look at?
No, I don't, Larry. I'm a technician. I look at charts. I look at recurring patterns. I look at indicators and oscillators. And the fundamental noise about the political environment plays no effect whatsoever.
Okay, well, that's what I thought the answer was, but I wanted to let you give the answer. What are you looking at here on this 98-week cycle, Stan?
Well, a couple of things here, Larry. I saw about a few minutes ago you had my chart up of the Dow Industrials from 1900 to the present. Chart. Yes. And if you're able, maybe you can put that one up first, and then we can review that.
Oh yes, I keep.
You and I discussed that one in the past.
Sure.
And what will be coming up here shortly is a chart of the Dow from 1900 through the present. And Larry, I find when looking at reversals, lows tend to project highs, and highs tend to project lows. And if we look at the Dow from 1932 through the present, this is not the chart that you got on the screen, but I can certainly talk to it. But I found that by looking at the July 8th, 1932 bottom, there it is. Yes, there it is.
Okay.
If we look at the low that occurred back in 1932, and we project forward in time, Larry, every single high, I mean 100% of the highs, lined up with important Fibonacci numbers or Lucas numbers, or they're doubling. For example, the high in 1966 occurred exactly Fibonacci 34 years from the 32 bottom. The high in 73 occurred 41, which is 42, i.e. 2 times Fib 21 from the 32 bottom. The 87 top occurred exactly 55 years from the 32 bottom, and so on. 89 years from the 32 bottom would be 2021. And sometimes these can be off by a year or so. I plugged in the monthly data, and the regression analysis points to October 2020 for the next high. So we're getting pretty close. Pretty close.
Like 4 days away. Shut the front door and raise the rent.
I think we got a little bit more than that. Let's go to the next chart, the one you had up here a moment ago.
Okay.
And that's this 477 trading day pattern. And I'm a guy who likes to look at charts and look at numbers and just look at these things over and over again. Sometimes it takes days for me to see these patterns. Sometimes it takes decades. Sometimes it takes centuries. Sooner or later, I see these things. But this next chart, which will be coming up here very shortly, I looked at all the intermediate cycle patterns in the stock market. Intermediate cycle average is about 8 months. But then I projected from a low to a high, and I found in every single case, if we counted about 477 trading days, there it is, from a primary cycle bottom to the second subsequent top, it averaged 477 trading days, plus or minus about 16, every single time. And so this chart's a little busy, but I've color-coded it to go from each primary bottom to the second primary top. And folks can look at it and study it, maybe print it off and analyze it. But it just does a dandy of a job of projecting cycle highs. And right now, if we look at the December 26, 2018 bottom, we project 477 trading days. That takes us to about November 13th, what's that, about 6-7 weeks from now. Plus or minus 16 trading days. I've looked at some of the shorter-term patterns and kind of put it all together. And while this pattern suggests about November 13th, plus or minus, Larry, I think the cycle high comes right around Election Day or maybe a day or two prior. And I think this is going to be a very important cycle high. So we're going to rocket higher from the open here, probably going to be up a Fibonacci 377 right out of the blocks here. But it won't be straight up, but I think the low we saw last week was probably is what I show in this next chart. And
that's a real interesting one. I had a chart very similar to that in the S&P and the Russell and the Dow Jones, and it was showing that there was a really important bottom right at that level from a Fibonacci basis and also time count. So something certainly happened Friday.
Yeah, well, the third chart illustrates this very well. Most of the major indices broke slightly below their 50-day moving averages. I don't find that to be all that of a big deal. The slope is still positive, and I think we're going to power higher from here. Here we go. Here's the chart. Larry, what I've done is I've looked at the February 19th high, which was the all-time high in the Dow and the former all-time high in the S&P, and I projected not Fibonacci numbers but Lucas numbers.
What's the difference between the Lucas and Fibonacci number in days? I mean, usually is it just a couple of days, or can it be substantial?
A Fibonacci number multiplied by 1.382 equals the Lucas series.
Oh, so okay. Well,
pick
that's
any fib number multiplied by 1.382, and you get the Lucas numbers.
okay.
And I find if we double the fibs or we double the Lucas numbers, they have an astounding ability to predict reversals.
Uh-huh.
So in this case, I took the Lucas number 29, doubled it. That's 58. And if you count 58 trading days from the Feb 19 high, well, you get to the May 14th low, trading cycle low.
Wow.
The next number in the series after 29 is 47, Lucas number 47. You double that, you get 94. And you take 94 trading days, add it to the Feb 19 high, and lo and behold, you get to the June 29th trading cycle low. The next Lucas number in the series is 76. You double number 76, multiply by 2. And Larry, if you add 152 trading days, not 151, not 153, but exactly 152 trading days to the Feb 19 high, you get last week's low right to the day.
Shut the front door. That's really interesting.
Shut the front door, Larry.
And raise the rent. Yeah.
It's all massive.
No, that's an easy one too. That's a simple calculation. I have, I looked at Lucas numbers, but I never, paid attention to the fact that it was 1.382 of a regular fib number, which makes a lot of sense, and it fits in with the sequence too. Who was Lucas anyway? I don't know who the Lucas was. Who was he?
Eduardo Lucas was a French mathematician commissioned by the French government to oversee. He was basically the equivalent of Jerome Powell in today's terms for the French government, and he was just a brilliant mathematician. And he connected the dots between Mr. Fibonacci and Euclid. And he connected the dots and found that the time counts and the ratios were all related. And he called them Fibonacci.
Yeah. Hey, could you stay with us for one small segment after this, Stan, and then we'll let you go?
Sure.
Stan Harley, the Harley Stock Market Leader. We'll be right back, folks.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're chatting with Stan Harley, the Harley Stock Market Letter. Stan, this is just a short one because we have two questions with the same question, and that is, where can they go to get more information about Eduardo Lucas and the Lucas numbers? Just Google it, or is there a book available, or...
I don't know that there's a. It's probably mentioned in a few books, but the easiest would be just to Google it. I went through many websites, and that's where I found information about Eduardo Lucas. Just to clarify, what he did was he looked at Leonardo of Pisa, which is what was his real name, and he also looked at the Greek mathematician Euclid, and he found. He was the first one to find that the numbers we call the Fibonacci numbers today and the ratios, 0.382, 0.618, and so forth, that Euclid had found, Eduardo Lucas connected. He made the connection. Well, these are all related here. He was the first one to do that, and he coined the term Fibonacci to Leonardo of Pisa.
Okay, great. Well, listen, we'll let you go now, Stan, but thanks for being on, and maybe we'll have you on sometime after the election.
Terrific. Look forward to it.
You be safe out there, my friend.
I shall.
Okay. Stan Harley, folks, of the Harley Stock Market Letter. We always like to have him on. He's got some great stuff, and today was really interesting about the situation going on with the Lucas numbers, which was interesting. Anyway, let's talk about the number we were talking about just a little while ago, and that was the NASDAQ number. Several people asked me about that number. It was 11,365. That was the actual high in the NASDAQ for today so far. We'll bring this up so you can see it here. This is one of the things we've talked about Sunday night. I didn't think we were going to make it in one day, but we, in fact, did hit it. Now, what's interesting, if you look at this, that's a 382 off of the high that we made way back in September. Boy, you have to pay attention to that. And another one, if you look at, those of you that like these numbers, is to take a look at what's happened to the S&P here this morning. Let me see if I can pull this up just to show you where you are with the S&P, because we're in a level here that you have to pay attention to this. Let's get this up here, and you'll be able to see it here. We almost made a 382 retracement of the all-time high up here on September the 2nd. Remember, September the 3rd was the anniversary date of the high in 1929 on September 3rd. But we made a 61% retracement of the high on the 16th of August. Let's try it again, Larry. The 16th of, yes, it was, September. Boy, try using your brain, Larry. It was the 16th of September, and we made a 61% retracement of that move this morning when it hit 33.38, and now we're trading at 33.27. So this could be nothing more than a little blurb up, and who knows? We don't know that for a fact, but the fact that these numbers have held so far today, that gives you an indication of the importance of them. So you just have to circle those numbers and pay attention to them, because when they work very good, and when they don't work, you just stand aside. But we're making new lows now. We're down at 11,285 already. We've already dropped 60 handles. That's a pretty big drop in the NASDAQ. Of course, nothing like when it goes up 200 handles, but the fact that it went to that level and held should be, you should give it a little bit of respect, I would think. So we'll keep an eye on that as we go through. We got as high on the gold as 1882. We had a low overnight at 1852. Folks, get ready to buy the gold and the silver, because we really believe that we've got a chance here for this market to go up. This was one of the things that we were looking for, was a stronger silver and gold market today, along with a stronger stock market. And but I didn't think we were going to make those fib numbers that quickly, but we certainly did. But we live in interesting times, as they say, so that's something that we need to pay close attention to. Several people have asked about the soybeans, and I believe we're really close to a spot where we might be getting ready to sell the soybeans. And the only reason I'm saying that is if you take a look here at this really long-term weekly chart, you'll see here that we have a big 1.27 expansion here, but we've already come off about 35 cents from the high. So what I'm watching now is to see what the rally will be off of these little breaks that we're having right now. So far, we've only been able to rally about 8 or 10 cents, which isn't very much. We haven't even been able to do that. Someone's asking a question here. Would the 38% at 11,365 complete a Hartley sell pattern? There's no – yes, it would. Yes, it would. But the problem is you don't really have a really clear ABCD in between, because it's just been a straight-up move over the last 8 or 9 days. There's some smaller swings in there, of course, but it's not a really clear Hartley when you look at it on the pattern that I posted here. That's really, you can see that it's a really strong pattern right into those numbers. The fact that those numbers hit, these were pointed out to you in the newsletter. If you get that 24/7 newsletter, those were pointed out to you, Sunday morning when you got it. So you had a pretty good idea of what to see it. But frankly, I didn't think it was going to hit it this morning. But and that, hey, it might go above it, and it could easily go above it. But if it fails from there, look out, because then there'll be some really big trouble. So, and these markets tend to fool you sometimes, so you don't want to stand too much in front of it. Regarding one of the factors that I wanted to talk about, two people over the weekend talked to me about what they were doing wrong, and they were both doing the same thing wrong, and that was they were staring at the machine all day long, trying to find little tiny things, moving averages or, outside bars or whatever they happen to be. It doesn't make any difference. If you're staring at that monitor, folks, you're doing yourself a great disservice, because that monitor is not your friend. And it's not a monitor, folks. It's a mirror. It's a reflection of everything that's going on in your life, whether it's your family, your money problems, health problems, whatever it happens to be. It's reflected in that. And that's why if you're staring at that machine, you're not doing yourself any good at all. You can put the order on and let it go, and put the limit minder on to let you know when you hit it. But believe it or not, no one else really cares what position you have on. I can promise you that with 100% accuracy, because you don't have any control over it. Nobody else does either. So put your stop in, follow your plan, and let it fall the way it's supposed to. That's really all you have to do. But looking at that machine all day long, you can put your orders in, and then if you want to study a market, like say study with Lucas numbers that Stan just talked, you could go back and study Lucas numbers and have a position on, but don't be watching that position. That's part of the problem now, is it tells you exactly where you are at the exact second, and that's not a good thing. It's really not important. you just you get wound up with these other things, and it makes it really difficult to describe. So anyway, that's what I'm trying to think about right now, but we'll see what's going on here. Remember, folks, those are really key numbers today at 3339 in the S&P and also at 11,365 in the NASDAQ. Both of those were spot on, so going to be interesting to see whether we hold. We're going to pay a few bills now. We'll be right back. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, someone's asked me to post that 382 in the NASDAQ. Again, I just did it a different way. I did it on the daily as opposed to the 4-hour. It's also at the 78% retracement of the high that we made on September the 15th, too. So there were double numbers there that made it stop at that particular point. So that's going to be an interesting, the fact that we hit it exactly. But we've come 100 handles off of it, folks. That's a lot. I mean, that's $2,000 in a matter of 30 minutes. So something that we have to pay attention to today as we look at these. So it's very, very important, at least from a technical standpoint. And that number in the S&P equates to 33.38. I believe the high has been 33.39 so far this morning. In fact, Mr. Z pointed that out earlier in the morning, long before it hit that level. Okay, I wanted to bring back one other thing about the futures market that we need to pay attention to today, and that is a very, very high probability short sale with a very, very low risk. I don't know if the October hogs have hit 72.90 as of yet, but if someone would check that, that's a 1.618 expansion, folks. At that point, you do not have to risk very much at all. Hogs is a very liquid market. And, it's easily tradable. There's a lot of hedge funds that trade it. So that's right within the lift. You only have to risk about $400 if you're going to do that. And the reward on that would be 5 times that. So it's a 5-to-1 risk reward ratio just based on the 1.618 retracement at that time. So I think it's important. I want to thank Stan Hartley today for bringing us attention to the Lucas numbers. I looked at them many years ago, but haven't looked at them for a very long time. But the way he showed that today was quite interesting, and I'll be doing a little bit of research on that, which I'll share with you into the future, because if it's anything related to 1.382, you have to pay attention to that, because 382 is how the markets trend, and you've got to know what that is, of course. So live every day in an attitude of gratitude, my friends, and we will have another full day tomorrow. I've got a couple other guests coming on this week, so we'll see y'all tomorrow on the flip side. May God bless.